Alright guys, here we go again with another of our Evolution Consulting market update videos as they have come to be known. This one being recorded on the 13th of August 2016. Obviously a Saturday, so no trading today. However, this is a market update video that is primarily a switch and signal, which is now obviously our weekly publication, our active trading journal. We just wanted to do, we're not going to do too many of these, but we did want to do a piece just to show you how accurate switch and signal has already been. We've only done 2 issues of it, but in the format and in the equity picks and in the selections that we've made in switch and signal, it's already proven to be, and we kind of expected it, especially for as long as we've been doing this. Just to show you how accurate it was. And by the way, for those of you who are not subscribing to Switch and Signal, please do. Seriously, we've already gotten like some seriously nice reviews on not only the format and the layout, but really obviously the content, which is what counts. Given our normally our Wirehouse edition that went out today, as a matter of fact, that's 25, 30, 40 pages sometimes of real deep level stuff. The Switch and Signal is really, it's just, I mean, it's only 6 pages long, and it's just kind of, buy and here's why, buy and here's why. So that being said, switch and signal, that we are talking about the August 8th edition. Okay, so that went out last weekend. So we're going to do a quick 5 trading session review, and the 3 picks were, and we on no uncertain circumstances pretty much prefaced and ended the switch and signal with a fairly clear and unambiguous statement, which is, guys, this week is all about oil and metals and commodities, and that speaks to something that we've been saying fairly consistently now, coming up on about a year and a half. We've been able to identify the trend is that markets now, especially U.S. domestic capital markets, they are just so absent any kind of real trading fundamentals at this point. Is that you'll get a sector, hype fest for a week, be that retail, which you just saw recently. So if you go back and watch the retail video that we did, surprise, we were right there as well. But you'll get a sector, or you'll get a storyline and a narrative, okay, and that'll propel a sector higher. And then everybody kind of stops and goes, what? Huh? And then there's a little bit of a market pullback, and then there's a reversion to the commodities. There's a reversion to, real stuff that has real value, be that metals or oil, natural gas. By the way, we're going to start doing that real soon. We haven't really spoken much about natural gas. We have done a fair bit on oil, though. That being said, though, our 3 picks for the August 8th edition of Wirehouse were JNUG, which is one of our favorites. Dare I say our personal favorite. JNUG, that is the Direction, it's triple leverage gold long ETF. Okay, if you guys follow on Twitter, you will notice that I speak of JNUG pretty much daily. Okay, so that we recommended at the open. We said, guys, current levels, we didn't really foresee much of a pullback, but I said, guys, if you want to do it current levels, we recommend 278, okay? And so on the 12th, we had a close of 305. All right, so that would have been pretty much, a nice quick 10%, really. And that speaks to what we've been saying, which is, so if you invested $100,000, you got another $10,000 that you can go buy metals with. Go look at the spot price of metals. They're less than they were at the beginning of the week, okay? So you see what we mean by, using these leveraged ETFs. We call a 3x leveraged ETF. We call it triple coupon day, okay? So you take your metal, you take your $100,000, you take your $10,000, you take your $1 million, whatever you got in your portfolio or in your trading account, right? And you get long something like JNUG. You're going to have 10% more than you did at the beginning of the week, okay, to go out and buy the physically good delivered underlying metals. And the reason we say that is, that's our, guys, I don't know how to say it any other way, it's convert paper into more paper into metals. Okay, so that was a close of 305. By the way, there was a high of 330. Okay, so you could have had a possible almost 20% in a week, in 5 days. It would have been about 18%, realistically speaking. All right, there were, it was up around 330 for a while, and then you saw, you got a nice good, crank up with the PPI index and the retail numbers and all that fun stuff. And then, Twitter went absolutely berserko when the metal smackdown, the price smackdown, somebody just waiting for the European market to close and just unloading paper trades. It was just so obvious at that point. I'm saying that was a full retard moment, and I tell you, don't ever go full retard, and that was full retard. Okay, so it was pretty obvious manipulation. Like I said, it's we're coming up, or we're in a geopolitical environment now where there are penalties for that. So What those may be, I don't know, but my advice is watch the news. Okay, invariably, and it's happened consistently. If you watch those real big metal smackdowns, something explodes, or there's a mass shooting, or there's something. Okay, so let's see if there's a penalty for that metal smackdown, because that was glaringly obvious. That was a full retard approach to metals repression. So I say, whatever you do, don't ever go full retard. Somebody somewhere went full retard. Don't ever go full retard. That being said, it was as high as 330. I mean, you could have, realistically speaking, so, if you held it all 5 days, you'd have had your 10%, or you could add as high as 18%. Still, at the end of the day, guys, you would have had double-digit returns within 5 days to go and purchase your physically good delivered metals, which is what's going to have the purchasing power after the global economic reset. And that brings us to... Up with the graphic, please. That brings us to USLV, okay, that we said same deal open, guys. It was like 24.77. We recommended that. We should just grab it at the open on Monday. And we were looking at a close of 24.63. Now, that was, a couple of pennies. Yeah, it was a loss, but we'll call it flat. Okay, realistically speaking. That was, again, post-metal smackdown. However, that was as high as 26.80. I know it went over 27. It touched 27 a few times, but realistically speaking, and you can see, we don't make these numbers up, guys. We actually take the more conservative number. We don't take the pie in the sky. If you absolutely sold the very tippity top, we're realistic about these numbers. 26.80, you could add a possible 8%. So if you silver stackers out there, if you threw 10 grand in, you had another 800, but you'd have another $800. All right. If you got 100 grand, you got another 8,000. Okay, so that's, you just go and you look at the spot price in metals, guys. Again, you would have had 10%. It's not like, we're at 8% and 10%. Oh, now the spot prices are higher, so I can buy. You could actually buy more. Okay, the spot prices are lower than they were. It's that's what we mean by, using these, just the metals ETFs predicated upon the asset or the underlying commodity that you want to buy. It's a money-making machine. If you time it right, which we've been, I think anybody watching will say we've been pretty damn good at it. You can just keep doing that from now until it all comes crashing down. And you will have piles of metal to show for your efforts, and you'll be very happy about that because you'll have a hell of a lot of purchasing power. All right, which brings us to the other play. Which one of these is not like the other one? UWTI, which is that's our long crude oil, long oil petroleum ETF. Okay, and I just can't remember. I want to say that's a ProShares. I want to say that's a ProShares. I could be wrong on that. But recommended it at the open, 1898. All right, and that closed pretty much at the high. All right, it tested 23, but let's be realistic about it. 22.65. Okay, that's not bad. That's a 20% run. 19.33 if you want to be super duper detailed about it. But that's 20%. So what can you do with your 20%? Could you go out and buy a barrel of oil or a portion of it, depending upon how big your investment was? Yes, you absolutely could, but I advise you do that. Not particularly. What I would do is I'd take that 20%, I'd go turn it into metals. As you can see, guys, these leveraged ETFs, the return to commodities, the weaponization of commodities, okay, and the usage of commodities is creating that volatility where you can make a tremendous amount of money, okay, trading the volatility, trading the usage of these ETFs as a weapon in geopolitical power plays, all right? We said it in, there's a direct quote in Switch and Signal. I'm not going to read it now, but there's a direct quote in Switch and Signal that we alluded to the fact that OPEC and Russia, guys, because they can sell oil for down-in-the-dirt numbers, because they can sell oil at super-duper double bargain discount price kind of levels, okay? Doesn't mean they want to. That was, and I've said this a million times, and I'm going to say it again, that was a product and a means to which to achieve an end. Okay, they wanted to kill the shale industry. Russia moved into Ukraine. Okay, NATO, or what's left of NATO, kind of responded with sanctions. Russia went, oh really? Okay, what do you need to make your shale industry, profitable? Oh, you need $72 a barrel, do you? Well, here, have a bazillion barrels of super duper cheap oil. And what they did is they effectively, it's no different from a pricing war, okay, with two gas stations on the corner. It really isn't. It was just, except, instead of 1 penny, they killed the price of oil by double digits. But the point of the story, though, is, all right, just because they can sell that commodity down at those, has demand for petroleum dropped? No, not as a fuel, not as a plastics manufacturing component, not for pharmaceuticals, not for any of the practical applications for petroleum products has it, has it dipped, or has there been a real dramatic reduction of demand for. So there's obviously now the only other way you could really manipulate that is through supply. Okay, and that's what they did, is they unloaded a ton of supply on the market. And hey, look, fundamental economics at work, guys, supply and demand. Slow clap, huh? But just because they can do that, and because that oversupply is there, you talk about the Saudis putting a freeze on production. They can dry that supply up in about 5 seconds if they really want to, or just raise the price. Yeah, there's more of it, but this is what we're selling it for. That's called collusion, okay? And it happens to work. In a capitalist environment, it happens to work. But again, you can take that move in oil, really, we saw, the $43 range. We're kind of waiting on 45. Okay, but we saw the $43 range, and you can see what that did to UWTI. And I mean, if you took a 5-day position in it with your trading account, guess what? You got 20%. Go buy the metals. It's what's going to have the purchasing power after the reset. You see what? So again, you can complain. All right, you can complain about, the market's manipulated. It's one way of going about it. Not my personal choice, but you sure as hell can complain. Or you can go, this is one of the most opportunistic or opportunity-laden environments you can possibly imagine, because of the volatility, the multiple storylines that are going on. And the speed, okay? 20% in 5 days, that's not the first time we've done that. I mean, we've been fairly consistent. And again, this is, a little pat on the back for us here. But we've been fairly consistent about it, guys. I mean, 10 years ago, 15 years ago, 20% in a day, or 20% in 5 days, you take the rest of the year off on a move like that. All right, now you can do it in 5 days just because of the speed of information, the speed of transactionary business. So, again, guys, what we're just getting at here is the point of the story is use the volatility, especially on the commodity side. Use the volatility to continue to convert your paper into more paper into metals, and be thankful that those ETFs are there, because it just makes it so damn easy to do. That being said, by the way, guys, if you noticed, I'm a couple of shades darker than I normally am. That is not a camera error or a lighting filter or anything like that. The EA and I, she and I did go to the Pirates game. It was on Thursday, and apart from the Pirates winning in a blowout 4-0 win, which maintains our perfect record to Bucks games attended to the Pirates winning. The temperature there, I swear, had to be measured in fucking Kelvin. It had to be about 100 degrees out. So this is what happens when I sit in the sun for any more than an hour or two. This is the natural color to which I turn. So let's go Bucks. That was kind of a cool, enjoyable experience. But nonetheless, guys, switch and signal. Subscribe to it. Seriously, if you like money, subscribe to it, guys. We're good. We're damn good at this. We're not gloating. Maybe a little bit. I haven't made the smug face yet. But in terms of the way we're approaching this market, it's not a matter of complaining. It's not a matter of whining and moaning and this is right and this is wrong and this is that, and we don't care. Like I said, even politically, we vote for our bank account here. All right, so at the end of the day, guys, the opportunity's there. We have been very, very accurate in doing this, and we want to help those that kind of look at what's going on and go, we are entering the era and the age, or I should call it the age, not the era. We are entering the age of the individual, the age of prosperity, the age of there's the sheeple and the individuals. And what we're looking to do is we're looking to help, the individuals, the ones that kind of detach from all that stuff and just go, great, how do I make a buck? How do I make me happy? That kind of thing. So with that in mind, guys, again, check out Switch and Signal. We will send, we'll still happily send the prelim edition. It's from July, just so if you want to get an idea what the format and the layout looks like. Okay, you are welcome to do so. Just send us an email if you want to take a look at the prelim edition, or if you'd like to subscribe, it's evolutionconsulting.world. This is the part where we put the graphic up, usually somewhere over there. Evolution Consulting, info at evolutionconsulting.world. If you have an email, or if you would like to email us, at Evo_consultants. If you'd like to follow us on Twitter, we've been in a mood on there recently, so by all means do feel free to follow us on Twitter, okay? We do offer like this in this example of switch and signal. Yeah, I mean we kind of recommended for good reason. One of our big three, as I like to say, our metals and our commodities ETFs. But guys, we put some stuff in switch and signal we haven't talked about yet, and I've been quietly watching them going, oh hell yeah, we'll gloat about that and add another 20-25 points. So that being said, guys, again, hope you're enjoying these. Hope these are helpful. And again, this we do want to see you subscribe to the Switch and Signal. We want to help you make money, man. So that being said, as always, guys, feel free to follow. Oh, and before I forget, I knew there was something else that I wanted to mention. The 25th of September, we are doing our first nuclear option show, which is basically just going to be a very long live broadcast. Market update and info update with copious amounts of humor thrown in for, if nothing else, my own morbid entertainment. So if you guys have questions, we're actually going to record it. We're going to put it up on YouTube when it's done. Excuse me, with all the lower third graphics and all the stuff on it. Okay. So if you want to send your questions in, we're actually going to record it live, so you'll be able to go do a YouTube live broadcast. So that should be fairly entertaining, and there is a rumor circulating that the EA might help out with the presentation on there. It's going to be about an hour and 15 minutes kind of long thing, and it's just going to be one big long geopolitical, send your questions in, and we'll answer them. If you guys want to send a couple of loaded joke questions in, feel free to. We'll have some fun with the nuclear option, all right? And there's no bleep button. We're doing it live, as O'Reilly said. We're going to do it live. So, again, guys, email us, follow us on Twitter. Be good. Everything really is a transaction.